I'm Pastor Aaron Harris, and in this video, I'm going to reveal the top 3 myths that might be holding you back from making wise financial investments. Let's get started. The first myth that we have about investing is that investing is too risky. I grew up in a rich dad, poor dad type of situation where my biological father, he has a zero net worth and he doesn't have any investments. But my best friend's father actually owns multiple homes and have a ton of money invested. When the pandemic first started and the stock market was crashing, I went to my biological father and I wanted to pick his brain about investing. And he told me that investing was way too risky and that was a way of just losing all of your money. Then I went to my best friend's father and talked to him about investing, and he told me that he had already put a large lump sum of money into the stock market as soon as it began to crash. As a result, a couple months later, my father still had a zero net worth, while my best friend's father actually doubled his money. And a few months later, that money quadrupled. So that taught me a lot about not being afraid of the stock market, not being afraid of investing, not looking at investing as something that is just too risky, where you're going to lose all of your money. But instead, if you know how to diversify your portfolio, where you diversify your investments, then it's actually not much risk involved at all. As long as you ride the wave and stay the course, then you will be all right. If you make good investments in things like index funds and mutual funds, that is a simple way to make sure that you have a diversified portfolio and that you do not lose all of your money. So do not let people go and tell you that investing is too risky. That just means that they don't know much about money. The second myth about investing is actually opposite of the first myth. The first myth was all about how you can lose all of your money. The second myth is that investing is a way to get rich quick. Many people look at investing as a get rich quick scheme and they think, oh, all I have to do is go out there and pick the right stock or pick the right investment and I'm going to be rich. Many people look at stocks like Tesla or Amazon and they think, oh, if I would have only chosen those stocks 10 or 20 years ago, then I would be a rich person today. And so many people are on the lookout for that next stock that's going to go up really big. But that is a way for you to quickly lose your money by using speculation, where you're speculating about risky investments and what they will do in the future. So, investing is not necessarily a quick way to get rich, but instead, you have a much better chance of making a lot of money by investing wisely over a long period of time. Other things that people do to get rich quick by investing is things like day trading. I remember when the pandemic first hit and I went and I just started day trading and everything was going up, and I looked at my wife and I said, oh, we're gonna be rich. This is easy. And I was making a ton of money each and every day. Then all of a sudden, the stock market went down and I started losing a bunch of money. And I realized that the reason I was gaining money was because of luck. But investing in things like day trading is a good way for you to lose your money fast. They say that between 80 and 90% of day traders lose money and don't actually gain money. And then another speculative investment is cryptocurrency. During the pandemic, many people were going wild and crazy about how much cryptocurrency was going up and how fast it was going up. But as they saw later in the pandemic, just as fast as they go up, they come down just as fast. And so that's a speculative investment, which is an easy way for you to lose much of your money. So anytime there's an investment where people are saying, hey, this is an easy way to get rich, and you put a little bit of money in and take a lot of money out, then usually it's a scam or it's really risky and you should run as fast as you can. The third myth about investing is the biggest myth of them all, and it is that you should wait until you make more money to begin investing. The reason that you should not do that is because you miss out on so much compound interest. For example, $100 invested in your 20s is worth more than $1,000 invested in your 50s. And so many people are saying, oh, I want to wait to invest because later I'm going to have more money. But then they miss out on all of that compound interest growing for them. So I recommend for everyone to start investing as early as you can. Another reason you should start investing as early as you can is because you begin to build good habits. You don't get into a habit of spending every single penny that you receive, but instead you practice habits like saving and investing, and that will give you knowledge and teach you more about investing in the future. And the challenge with waiting to invest is that what many people do is that they wait until it's too late. They wait until they get to retirement age till they start thinking about retirement. If you start thinking about retirement in your 40s, then really it is late and you are really behind and you have to do everything that you can to catch up. Or many people start looking in their 50s to see how much money they have saved for retirement, only to realize that they do not have enough money to sustain the lifestyle that they want to sustain when they retire. Some people get to retirement age, but they're not able to retire because they do not have enough money to support them. And then many people believe that, oh, I'm going to be really successful later along the lines. I'm going to be really successful in the future, or things are going to work out later that's going to help me financially. And I'll worry about my retirement then. I'll worry about investing then. And that's not a good idea because there's no guarantee. As much as you feel like, oh, I'm going to be successful, I'm going to get this raise, I'm going to get this promotion, I'm going to get this job, I'm going to make this much money. If it's not guaranteed, you don't want to put yourself in a position where you're withholding investing because you have a hope that things will get better in the future. Instead, you want to start investing as soon as possible. The only time I would encourage you to wait to invest is if you have high interest debt. If you have a high interest debt like credit card debt, then you should pay that off first, because the interest you owe on that credit card debt will usually be much higher than any return that you can get from investing your money. So take care of your high interest debt and then make sure that you get to investing. It's essential that you learn as much as you can about investing. The reason that you want to learn as much as you can about investing is because people make it their full-time job to get their hands on your money. And the less you know about investing, the more likely you are of being taken advantage of by someone who shows you something that you know nothing about, and they tell you how great of a deal it is. And because you don't know anything about investing, then you go ahead and you do whatever investment they're suggesting for you to do. And usually they're getting compensated or a commission off of the investment that you choose. And that's why it is vital and important for you to continually learn about investing so that people do not take advantage of you, because that's how some people make a living. And so if you want to learn more about investing, what you can do is continue watching my videos. I have many videos on my page about investing. I'm going to continue making videos about investing. So you can click the link and continue to watch these videos.